Something is quietly happening in the silver market right now, and almost nobody is talking about it. And by the time most people figure it out, it may already be too late to act. I want you to stay with me for the next few minutes because what I'm about to share with you is not the usual noise you hear on financial news channels. This is something deeper, something that's been building for months beneath the surface. And in 2026, it could completely rewrite the rules for silver investors, everyday people protecting their savings, and even the broader global economy. If you've never paid close attention to silver before, today is the day that changes. And if you've been watching silver for years, what I'm about to reveal might still surprise you. Before we get into it, if you find this kind of analysis valuable, the kind that mainstream media skips over, hit that like button right now and subscribe to Silver Signal because we cover exactly these kinds of hidden economic shifts before they go mainstream. So let's start with what's actually happening. For decades, the global silver supply has followed a fairly predictable pattern. Mines produce it, industries consume it, and investors buy whatever's left. But something broke that pattern quietly in the last 18 months, and the break is getting bigger, not smaller. Global silver mine output has been declining in key producing regions. Countries like Peru and Mexico, which together account for a massive share of the world's mined silver, have been dealing with a combination of labor disputes, political instability, environmental restrictions, and simply running out of the high-grade ore deposits that made them so productive in the first place. And here's what makes this different from past supply dips. It's not a short-term disruption. Geologists and mining insiders have been quietly signaling that many of the largest silver mines in the world are past their peak production years. That means the easy silver, the kind that's cheap and fast to pull out of the ground, is already gone. What's left requires more time, more money, and more energy to extract. And that fundamentally changes the cost structure of every ounce that reaches the market. Now here's where it gets really interesting. And this is the part that most analysts aren't connecting the dots on. At the exact same moment that silver supply is tightening from the mining side, demand is doing something that's never happened before in history. Industrial demand for silver is surging, not because of jewelry, not because of coins, but because of technology. Solar panels alone now consume hundreds of millions of ounces of silver every single year, and the global push toward renewable energy isn't slowing down, it's accelerating. Every solar panel manufactured requires silver. Electric vehicles require silver. The entire semiconductor industry that powers artificial intelligence, smartphones, and next-generation military technology, all of it runs on silver. And unlike gold, which mostly sits in vaults and jewelry, the silver used in these applications is consumed. It's gone. It doesn't come back into the market. So you have a supply side that is quietly shrinking, colliding with a demand side that is growing faster than at any point in modern history. That collision hasn't fully hit prices yet, but when it does, the move could be historic. And there's a third layer to this story that almost nobody is discussing. Central banks and sovereign wealth funds around the world have been quietly accumulating physical silver at a pace that is drawing attention from commodities researchers. After years of gold being the primary monetary metal, there are signals, subtle but real, that institutional money is starting to treat silver as an undervalued strategic asset. When smart institutional money begins moving into a commodity that is already facing a structural supply deficit and a technology-driven demand boom, history tells us what usually happens next. Prices don't just rise, they reset to a new level entirely. Think about what happened to lithium when the EV story became undeniable, or what happened to uranium when the nuclear energy narrative returned. Silver in 2026 may be setting up for a similar kind of repricing moment. Not because of speculation, but because the math of supply and demand is forcing it. Now, I'm not here to tell you silver is going to the moon tomorrow or that you should put your life savings into any single asset. That's not what Silver Signal is about. What we're here to do is give you the information early, the honest analysis, so that you can make intelligent, informed decisions for yourself and your family. And right now, the honest analysis says that the supply shift happening in silver is real, it's structural, and it's accelerating heading into 2026. Whether you're someone who already holds physical silver, someone invested in silver mining stocks, or someone who has never thought about silver at all, this is a moment worth paying attention to. The window when this information is still hidden doesn't stay open forever. Once Wall Street fully prices in the supply deficit, the opportunity for everyday investors looks very different than it does today. Drop a comment below and let me know, are you already watching silver, or is this the first time you're taking it seriously? And if you found this valuable, share it with someone who needs to hear it, because this is exactly the kind of financial signal that changes how people think about protecting their wealth. The shift has already started. The question is, will you see it before everyone else does?